Most people think earning $1,000 per month in passive income requires millions of dollars. And honestly, that's why many people never even try. The goal sounds too far away, too expensive, too unrealistic. But what if it wasn't? What if generating $1,000 per month in dividend income was simply a math problem? Because that's exactly what it is. In this video, we're going to break down how much money you actually need invested to generate $1,000 per month in dividends. We'll look at the numbers. We'll compare different dividend yields. And by the end, you'll know exactly how far away that goal really is. But before we get there, we need to understand one simple concept. Because everything starts here. Dividend yield. Dividend yield sounds complicated, but it's actually very simple. Imagine you invest $10,000 into a dividend stock. If that investment pays you $300 per year in dividends, you're earning a 3% yield. If it pays you $500 per year, you're earning a 5% yield. That's it. Dividend yield simply tells you how much income your money generates. And once you understand that, the path to $1,000 per month becomes much clearer, because $1,000 per month equals $12,000 per year. That's the number we're trying to reach. Now let's start with the conservative approach. Imagine building a portfolio of high-quality dividend growth companies. Businesses that have increased their dividends for decades. Companies that sell products people buy regardless of what's happening in the economy. Food, medicine, utilities, household products. A portfolio like this might generate a dividend yield of around 3%. So what happens? To earn $12,000 per year at a 3% yield, you would need approximately $400,000 invested. That's a large number. But remember, the goal isn't usually to save $400,000 overnight. The goal is to build toward it over time. Now let's move up the income ladder. The balanced approach. This is where many investors begin looking at REITs and higher-yield dividend stocks. These investments often produce yields closer to 5%. At a 5% yield, the math changes significantly. Instead of needing $400,000 invested, you would need approximately $240,000. That's $160,000 less capital required to generate the exact same income. The income arrives faster. But the investments can be more sensitive to economic conditions. Which brings us to the final approach. The high-income strategy. This is where investors start looking at covered call ETFs and other income-focused investments. Some of these investments produce yields around 10%. Now watch what happens. At a 10% yield, generating $12,000 per year requires roughly $120,000 invested. Suddenly, the goal looks much closer, much more achievable. But there is a trade-off. Higher income usually means higher risk. And that's something every investor needs to understand. Because the goal isn't simply reaching $1,000 per month. The goal is keeping that $1,000 per month for years. And that's where many investors make mistakes. They chase the highest yield they can find. A stock paying 12%. A fund paying 15%. An investment promising huge cash flow. But sometimes those yields are high for a reason. Sometimes the business is struggling. Sometimes the dividend gets cut. And when that happens, both income and portfolio value can fall. That's why successful dividend investing isn't about finding the highest yield. It's about finding sustainable income. Income that can survive market crashes. Income that can survive recessions. Income that can continue growing year after year. Because once that income starts growing, something powerful happens. Your dividends begin buying more shares. Those shares produce more dividends. And those dividends buy even more shares. That's compounding. And it's the reason many investors eventually generate far more income than they ever expected. So, how much money do you actually need invested to generate $1,000 per month in dividends? The answer depends entirely on the type of investments you choose. Around $400,000 at a 3% yield. Around $240,000 at a 5% yield. or around $120,000 at a 10% yield. 3 different paths, 3 different risk levels, the same destination. But here's the question most people should really be asking. What if you don't have $120,000? What if you're starting with $10 per day? Or even $2 per day? How long would it actually take to build a portfolio capable of generating $1,000 every month in dividend income? That's exactly what we'll cover in the next video.